The success of international sporting events such as the Confederations and 2010 FIFA World Cup, South Africa's tourism and travel industries have received a considerable boost. Short of opening your own tourist establishments and reaping the benefits, there is a way of making money from the hospitality industry through the listing of your company on the stock exchange. But it seems many South African companies are taking advantage of this option. Joining me now in studio to tell us more is Noah Greenhill, Senior General Manager, Marketing and Business Development at the JSE. Noah, thanks so much for joining us.
Pleasure.
Let's take a step back and see what kind of exposure a South African investor can have to the likes of travel and leisure through the JSE.
So at this moment in time, it's relatively small. You know, you've got companies like Southern Sun, like Comair, like One Time Airlines, like Goodison's Leisure, like City Lodge, those kinds of companies. And then you could stretch it a little bit through to the famous brands and Spur Holdings and those kinds of restaurant type companies where you'll get your exposure to the industry. But I think there are a whole lot more companies out there in South Africa that potentially could give investors a lot more exposure to the sector.
Because essentially we've got 11 stocks that are listed in the travel and leisure sector.
And that can't be representative of the sector in South Africa.
And why do you think that is? Why do you think more companies haven't come to the fore and listed?
I think there's a fear factor around it. I think there's a lack of knowledge around listing. I think there's I think the biggest factor is at this moment in time is certainly the gap between buyers and sellers' expectations and what the listing can do for a company. So I think a lot of companies are holding back and saying, well, let's see how the market goes before we consider a listing. And yet, in my view, biased of course, is that you list when the right time in your strategic lifetime is. It's not about the market. If you could time the market, well, you'd be a multi-billionaire and we wouldn't need to chat.
Well, you know, looking at the World Cup this year, did you have a lot of inquiries about companies potentially wanting to list, or was it relatively flat? No,
look, I mean, I don't think a major sporting event is going to stir people to list. I think we were pretty flat over the period of the World Cup, purely because I think most people were focused on the soccer, and it was pretty much like the silly season in the middle of the year. But I think we're starting to see that a lot more international guys are looking at South Africa. I think the World Cup did a world of good for us. So you know, people are not afraid of investing in an economy like South Africa, and obviously the JSE is a mechanism to do that.
Let's look at how some of these companies have been faring relative to the rest of the sector in the JSE, because from my understanding they haven't done very much. They've literally flatlined. Yeah,
look, and flatline is not necessarily a bad thing. You know, it depends on what the investor's expectation is in terms of their risk profile. So if they're looking for a long-term play, then these are the kinds of stocks you want to be in, because I think as South Africa grows, I think you know, the more beds Southern Sun are going to bring onto the market, the more acquisition opportunities are going to open up for these kinds of stocks. But it's a long-term play. These are not the in and out kind of stocks that you're going to see big volatility in. Yeah. These are long-term, steady plays.
Well, let's look at some of the favourites. I mean, you know, the likes of City Lodge, and we know that this company is relatively viewed as one of those defensive stocks. And how has that been faring over the long term when you compare it to the likes of Sun International, and of course you mentioned the Goodison Leisure Group a little earlier, the Don Group as well being one of those favourites.
Yeah. Look, I mean, I can't comment on the specific stocks, but if you look at the hotel sector, and I was at a conference couple of days ago or a couple of weeks ago talking about the hotel industry, and a lot of the big internationals that we don't normally see in South Africa are starting to come into South Africa because there's big opportunity here. Now, does that present challenges or opportunity for companies like the City Lodge, the Don, the Southern Sun, and the Goodison Leisures? In my view, it creates opportunities. More people that see these big hotel groups coming into South Africa, the more opportunity there is to come and visit here. The more opportunity there is to come and visit here, the more opportunity there is to require a bed
Exactly.
a hotel.
Noah, we're looking at the overall South African space right now. I mean, and looking at the real estate sector, you know, the property stocks we know on the JSE have been outperforming.
Absolutely.
And doing relatively well. And even though that's despite the fact that property prices haven't really moved that much over the last couple of years. I mean, you know, let's sort of juxtapose these two sectors of the JSE.
You know, I think you have to juxtapose in the property sector, it's assets. You're buying into the asset, whereas I would imagine in the leisure sector, you're buying into the services. And that's two very different businesses. So you've got, and again, our mantra, diversification, diversification, diversification. You know, and again, it's about, if you believe in the property sector, you could argue maybe it's a little bit overbought. Perhaps the leisure sector is still a burgeoning sector. You've got to.
But they're tied.
They are tied together. There's no question, because at the end of the day, well, I suppose you could buy through the hospitality fund into the properties that where the hotels are, and then you could buy the services through the leisure company. So I suppose you're diversifying in that sector across the asset spectrum.
And sort of something very peripheral. I mean, if you see how the airline stocks have been performing, because that's also tied into hospitality, it's tied into the real estate sector as well. That's actually been outperforming in South Africa, you know, with the likes of Comair being listed and of course One Time.
So again, you know, it amazes me. In the newspaper or on CNBC, you're hearing about the recession and the double dip recession, and people are battling and people are struggling. Every time I fly, regardless of airline, the plane is full. Full. It's not like there's one or two seats available. The plane is full. That's, you know, so people, and nobody's buying those seats on the back of nothing. You know, they've got to pay good money.
And no, I mean, for viewers out there, of course, with businesses and thinking of listing their industry, their hotel, or if they, you know, perhaps have a guest house that is really developing quite well. Of course, we know there's certain rules and regulations. We have a certain market cap. What advice would you be giving them if, you know, looking at these share prices and the fact that the travel and leisure industry hasn't really been outperforming, you know, what incentive is there to list?
So listing is not just about a share price. In fact, if anything, the share price is the one thing in the listing equation that is out of the control of the owners of the business or the managers of the business. The share price is a function of supply and demand. List for the right reasons, and the right reasons are the right strategic reasons for that specific business, whether it be acquisition opportunities, ability to raise further cash to acquire other businesses, or just pay down debt or working capital, or succession planning. Perhaps the owners of the business are getting on, and now it's time to hand over the business to the next generation of managers. But list for the right reasons, not because you want to maximize a multiple at the time of listing.